Hi and welcome to today's morning report on Tuesday, the 2nd of December, with me, Richard Perry, market analyst at Handtech Markets. The European trading session has started off on a decent note, actually. The FTSE has rallied strongly and the DAX also has rallied strongly, and that's come on the back of this increase in the oil price. Oil prices rallying sharply yesterday, and that has certainly benefited the oil majors in these indices today. FTSE has a large oil weighting in its index, so the index is benefiting quite significantly. Percent higher on the FTSE. DAX is also 0.5% higher and above 10,000. Now that is means that it's within 50 points now of that all-time high at 10,050. So the DAX remains strong. FTSE, this is a big rally that sort of turns around what looked like a bit of a corrective outlook. So if it can hold on to this, then the bulls will start to get much more interested once again, I think. The gold price remains very volatile, and I'll talk about that in my gold chart, obviously. But the gold price is down 15 points, having rallied, and from the low, it rallied up towards $79 in all on the day, towards 12.20, 12.22, I think it was in the end. 12.21. And an incredible move higher as the dollar weakened and the market just unwound that oversold position. But very, very strong rally on gold. I think it's going to continue to be volatile today. The volatility on gold took me by a little bit by surprise. I thought it was going to be volatile yesterday. I didn't realise how much by though. $79 on the day was an incredible move. And that sort of came on the back again of this, the dollar failing to really make any sort of headway. It's been so choppy recently, you can't really get any real traction in these dollar trades, but there is still this general slight positive drift higher with I suppose you could argue a sequence of higher lows in this dollar move there, and you can also see a sequence of higher highs as well. So there is this slight improvement in the dollar, but it's still very choppy within this range, and it means that it's quite difficult to play on a multiple day basis. But certainly today we're seeing again dollar strength coming through. There's not a great deal of economic data today. The UK construction PMI is out in a few minutes, expected to slightly correct back to 61, but remaining very strong. But it's only around 7-8% of the UK economy, so it's not going to be having a great deal of an impact, I think, on sterling today. It might have a bit of an impact if it comes in positively, but to be honest, it's not too much. And pretty much that's it. Apart from the fact that we've got a couple of Fed speakers. We've got Janet Yellen and Stanley Fischer, both of which are at the dovish end of the scale, and they are just giving a few comments at a conference today, and I don't imagine they're going to do too much to impact the dollar, but I think you need to be aware of them speaking in case they do. That takes me to my chart of the day, which is the Aussie dollar. We've had the Reserve Bank of Australia coming out with its monetary policy today, standing pat on 2.5% interest rates. But obviously it's going to try and talk the Aussie dollar lower, and that's not really worked. The Aussie dollar has found a bit of support yesterday at 84.16 and rallied quite reasonably today, but it's just drifted off again. And the Aussie dollar is the only one of the majors. Actually, it's flat at the moment. I was going to say the only one of the majors that is stronger than the US dollar today, but is actually now flat on the day. But interesting. Look at this daily chart. We had this breakdown below the 85.40 level, and that 85.40 is now being the basis of resistance. Now, if you look on the intraday chart, I did highlight in my morning report that there is a bit of a base pattern potentially going on here, a bit of a head and shoulders reversal, with the left hand shoulder there, the head, and then the right hand shoulder. You had an intraday move above, but didn't really complete the pattern in any real way. That needs much more confirmation than that. Certainly being a bear market pattern, bear market rally pattern. But the potential for this pattern still remains. Now, and it remains until I think that this 84.60 84.68 support is breached. You're only 22 pips away from there now, so it could well be breached quite quickly. But at the moment, it's still in place. Now, if you also look at these momentum indicators on the hourly chart, the RSI looks as though it's just beginning to get a little bit more positive. And also the MACD lines as well. So it is something that maybe we should keep an eye on. Obviously, being a bear market pattern, you've got to be careful because the selling pressure does tend to resume sooner than you might have thought. And at the moment, we are still in this big bear phase. And I would certainly say that is that's the horizontal support 85.40 area. That horizontal support has now become the resistance in this pattern, so that is obviously a key near-term level. So it remains something that you need to be aware of. Anyway, I wish you good luck, and if that support at 84.68 does get broken, then I think you'll probably be quite quickly back towards these lows. Anyway, 84.16 is that key low. Okay, so I wish you good luck, and I will speak to you later. Thank you.